The global top 5 dividend stocks 2022. And therefore, hello and welcome to another video on my channel, this time about the stock market once more. And on my side, Clemens from the Instagram profile Dividend Post, or that Dividend Post, it's correctly spelled, if I have it correct in mind. So we have to maybe rephrase, it's the top 5 dividend stocks of Clemens. Yeah? Maybe you want to introduce yourself, our community. How did it come that you are investing, and why this strategy on dividend stocks?
Thank you, Bernhard, for having me. Talking about dividend investing, maybe we should rephrase it to dividend growth investing. When I started investing in stocks was 2012. As I'm working close to the capital markets, financial markets in the financial industry. So it was not obvious, but for me, kind of, how can I say, use the opportunity to do stock investing. As you said, I'm running the Dividend Post channel on Instagram since nearly 1 year, and maybe in the future, not maybe, it will, but we don't know when exactly, I will start a blog or website where you also can find tons of information about dividend growth investing.
That's very interesting. So I want to go straight into the topic, your top 5 stock picks on dividend stocks. And the first one is Roche. You can see it also on the screen. We made a presentation therefore that it's easier to follow in the video. And the first thing I can see and I would like to mention, sorry, it's a bit difficult to make this video right now again, because for our international community, which I appreciate so much, we always make this English version as a second video, and now you always mix up what you already had in the German version, and then it's sometimes a bit difficult, so sorry for that. But what I also mentioned in the German version was that the dividend yield is not that high, but not that important for you, because if you're talking about dividend stocks, you would say, okay, I need this high dividend yield. We will try to find stocks by maybe 5-6% dividend yield. But this is not so important for your strategy. It's about the growth rate.
Exactly. So dividend growth investing is a marathon. It's not a sprint. So it depends when you started investing in, like in this case, Roche. So if you said, hey, today it's just nearly half dividend yield. Okay. But imagine when you started 7-8 years ago. And this is all about dividend growth investing. It's about making use of the time working for you.
So compounding, all about the compounding effect.
Exactly.
And maybe also a disclaimer at this moment, we both own Roche shares. I know it from the German version already that you have it as well in your portfolio.
Nothing changed.
I'm in it since about 2017, but honestly, I was there in before, but then I changed my broker, and then I had to sell it and buy it again because it was easier than transferring it to the new broker because of the depository. So, but back to the company, Roche, you said it is very interesting for you because of dividend yield and the dividend growth rate in the last 5 years. Some more figures to mention. Payout on free cash flow is what you have screened here.
Yes. So there are 2 ways you can use payout ratio, or you can calculate actually payout ratio. The one is free cash flow, which is for me more the closer to the truth.
Okay. Interesting.
In comparison to profits, or earnings, because the thing with profits, bottom line, there could be between top line. So top line means revenues, and bottom line profits. There could be something like happened financial engineering. And so I take the cash flow, free cash flow here for payout ratio. I mean, with 50%, very, very healthy for a healthcare company. But nonetheless, what's important here when we talk about Roche, and this is why I relate to healthcare. We are talking about the 2nd largest pharmaceuticals company. We're talking about the 3rd largest healthcare company in general. So the first one is J&J, Johnson & Johnson, and second is United Health Group, both from the US. And what's also worth to mention here, we have here really a pure dividend aristocrat from Europe. And and you like this topic, it's currency diversification.
Yes, this is very important for me as well. We already had this in the German version. It's a bit difficult to make a conversation again and authentic, yeah, but we try our best. And this is also about this diversification, and we talked about it. So you also buy the stocks always at the emittance exchange in the emittance currency, so in Swiss franc in this case. And you also have this currency accounts, which is very important for you as well. Because a lot of people I'm talking to in the community and so on, so also looking for the exchange, don't follow this rule. Yeah, so we are very lonely in that point, and it's I like it that you have the same opinion. So also this currency accounts and this currency diversification very interesting. And the company is very much also into testing, I think. They do this testing for COVID, which is now very important, but also, for example, on drugs and so on. So it's a big sector on testing.
Exactly. But what you see in the recent results, earnings results, there was a shift from classical pharmaceuticals, so medicine products, pharma business, to more diagnostics, So
diagnostic is the English word for it,
And this also paid off in the financial statement of Roche in this case,
Very interesting. And one more thing I don't like that much is this. I think it's the only stock in Switzerland that is a barrier share, or the only one I know, because I prefer the registered shares where I'm in the registry and get my invitation from the company direct for my invitation for the annual meeting, and this is the only one in Switzerland that is a barrier share that I know. But anyway, it's still interesting to invest in Roche. But now I'm excited for the next one you picked for us. I press the button, and this is 3M. So now we are in the United States. 3M, I guess most people know it from the Post-it, but they are doing much more and have an interesting dividend yield and growth. So tell me more about that.
So 3M. Now we're really talking about a fundamental investment. So in the sector industrials, I assume it, and I also have it in my portfolio.
Me as well, for the disclaimer.
So don't follow us. Make your own thoughts about it and due diligence on the stocks.
We are not responsible for your decisions. It's just exchange, no recommendations.
Maybe give you the one or other inspiration or impulse, but as I said, do your own due diligence. And 3M, Dividend King. What is a Dividend King? You would ask me or not?
Yes,
I can tell you.
I ask you in German as well.
Yes. So when we're talking about Dividend Kings, we say we have here a dividend growth streak of more than 50 years.
63 years.
In this case, 63 years.
Increasing.
Increasing the dividend year by year. You see here, I would say, a very solid dividend growth rate of nearly 6%. Nonetheless, the last year, they increased the dividend by 0.6%. So not.
But they increased.
But there was inflation, So
that's also a topic I want to cover later,
Okay. But in this respect, what you buy here with 3M is an interesting company. They recently announced that they will spin off their food safety business segment, which is dealing with this testing kits for allergies. Hopefully it's the English right word. For
I guess so. Nutrition tests and all that stuff.
Yes, exactly. They will spin it off.
Topic for me myself. Sorry, don't want to interrupt you. They will build a new company together with Neogene, and so we as 3M shareholders will receive also shares from Neogene. I don't know, in 2023. I'm not sure, but what I'm sure about is that you see here for a 5-year stock chart, not that very, I would say, astonishing share price growth. No big gains.
But what you see here is, and this is, I would say, somehow typical for big companies, and 3M is here a large cap. We are talking about, market capitalization of 100, and now we're going to English, billion US dollars. So they had to undergo cost efficiency program recently, and hopefully the outlook is it's already more positive also on the revenue side. So revenues are in comparison to the past, started increasing again.
Which might make it even more interesting to buy right now, maybe.
Yeah.
Two more things I would like to cover. The one thing is the dividend yield we see right now. We already started this topic, but then we moved maybe a bit too fast. I think this very important thing is always, also for me, the dividend yield on the price when I bought. This
Of
is
course.
the very important thing. Yeah, because now most, obviously not 3M, but we are talking in general. Also exchange, always interesting for me, and also in the comments. We're talking in general about this dividend yield return, and now a lot of stocks made massive gains in the last 1-2 years since the COVID crash, which was also obviously not the worst thing from my decision to make massive purchase in March 2020. Mm-hmm. And so now, of course, at a lot of companies, the dividend yield is pretty low because these stock prices are that high at the moment. Yeah, but it's always important on the price you had when you bought, or the average price you got when you bought. Yeah,
exactly.
So you also follow this cost average rule, I think, as we have it from the German version already. Which is also interesting, I guess, to mention. And then there's one more topic I would like to cover. This is the inflation scenario topic, because I was also talking a lot about this in my videos since more than 1 year. And therefore, you could say right now, okay, 3.3% is below the inflation rate. So you are negative on the real return. But you have to see it, I think, a bit different, because the one thing is what was the price when I bought. So there might be already another return on that, the real dividend return. And the other thing is we are also talking in general, not on 3M right now, we are in general talking also about the stock gains still, the growth. Yeah. So and one more important thing is the advantage of equities is that this is what inflation is about, that you are owner of this company. And if there is inflation going on, your company, your part of the company will also gain this on the price, I guess. This is the principle in general. Yeah. This is so let's say this is the advantage to obligations.
You covered now two very important things, and let me just highlight just a few words to both of these topics. The one is your yield on cost, or I call it growth yield. Yeah, so it depends on the period of time you started invested in this company. Yeah, so it could be that your personal dividend yield is with 3M, if you invested 10 years ago, somewhere between 5 or 7%. Yeah. Nonetheless, this shouldn't stop you for investing if you're still convinced in the company. Yeah. So I mean, you can dilute yourself, so your yield on cost. Yeah. I know this is some psychological thing, that you start, hey, my yield on cost is 7%. If I invest today, I will dilute it to 5%. Yeah, you know. This is something I want to mention here. The second thing is a company able to increase prices for the products, for the service they offer to the market? And I think with 3M, we have here, and that's also mentioned in the German version, I'm not sure it's 35 or 50,000 products, but there are a lot of products, so it's not only the Post-its, it's not only the masks here, the FFP2 masks, there are a lot of different products, so I say they should be, in the position.
So to make it in easy words for simple people like me, you're from the finance sector, so I use different vocabulary. No, but what it's also about, I guess, is just, are they able to pass the inflation in the price of the products they sell? Because if they are able to do this, they can also increase on the inflation the dividend yield, and then we are safe as a shareholder compared to if you have obligation. For example.
I mean, let me add here, are they able to pass through the inflation to the prices? And are they able to increase the dividend for this level, to this level?
Profit,
so
at least.
It's not the dividend yield, it's about the dividend growth rate. And normally stocks like 3M, they cover the inflation rate by increasing their dividend rate, and a little bit more, of course. And we come to stocks where we have significant more minus the inflation rate. So
very exciting topic, I guess, and also looking forward to further exchange about that in the comments. And now I switch to the next company. Broadcom, not in my portfolio. I will also put the list of all my current 230 stock positions in the description, because I think it's just interesting to see that, to get inspiration and to exchange. Yeah, so always looking for exchange on that, and then everybody has to decide by himself what he likes or he doesn't. Yeah, Broadcom, not in my portfolio. Is it in yours?
Yes, it is. Yeah.
Okay, disclaimer, good. And what is it about? What can you tell us about Broadcom company?
Yeah, Broadcom, famous, and I forgot to mention this in the German version, by the way, is famous as they are building semiconductors, and they have as a big customer. You could guess what? Who is not what? So who is the customer?
I have no idea. Apple? I don't know.
Yes.
Yes, it is.
It's Apple.
Okay,
yeah.
cool.
Yeah, and so they faced a similar risk like Skyworks Solutions. Yeah, also a semiconductor a builder, producer. Actually, so 20% of their revenues are dependent on Apple. So they are famous for this, but they're also famous for their transactions they did the recent years. So they bought Symantec, yeah, security solutions provider.
Yeah.
They bought CA Technologies. So they have also a big footprint in the 5G network infrastructure. Yeah. And what's also interesting with Broadcom, and now you look on the right side, is it hopefully also the right side for viewers?
Yeah.
It is.
It has to be, because I will just put it on the screen like this, yeah.
Okay. So, and you look at the 5-year dividend growth rate, and you see here, and no, it's not a typo, it's 48, or let's say 50%, yeah.
That's crazy.
That's really crazy.
But also the prices surged of the stock enormous. Since 2020,
Yeah.
we have about 200%. Yeah, so it's
Yeah, I mean,
massive.
this is the perfect example for a total return stock. What does it mean? On the one side, you have share price gains, yeah, so gains here on the share price. On the other side, you have a growing and growing and growing dividend yield, yeah, with permanently, regularly cash flow you receive from the company, yeah.
And if you connect this to the price you paid when you bought these shares, yeah, the dividend yield will be, I guess, I don't know, but I don't know when you bought it, but it must be much higher, yeah.
Yeah, I'm happy with the stock, yeah. Of course, but we have to mention here also, yeah, when we look in the past, it's not a, how can I say, precondition or guarantee for the future.
Yeah,
so
yeah.
in
We
December,
don't have this crystal ball.
Yeah, in December, Broadcom announced that they will increase the dividend, or they already did it, yeah. And increase the dividend by 40%. So not 40, 14.
14
yeah.
last year.
Last year, yeah. So, but I would say the business model is stable enough, the revenue base is stable enough, the payout ratio you see here is also stable enough that there will be at least not at least, it will be not more than 2-digit increases also in the future, yeah.
The PE ratio?
Yeah, I mean, you know, sector, IT.
Yeah, sure.
But you're right, yeah. Is it now the best time to buy the stock? Maybe, maybe not. We don't know. We don't have
compared to the peer group, it is not that high.
Yeah.
Yes.
Look at
That's
Nvidia.
correct.
Look at an Nvidia stock chart.
That's great. I think it's above 100, if I have it correct in mind. Okay. Anyway, let's go to the next one. Rowe Price, again, United States. I don't have it in the portfolio. You?
I have it.
I know from the German version. Okay, great. What can you tell us about Rowe Price? What are they doing, and why this stock in your top 5?
I mean, now I can prolong what I said with Broadcom. Yeah, total return matters, and it matters a lot. Yeah. In this case, with Rowe Price, we have here a dividend aristocrat, a dividend champion. So what does this mean? More than 25 years of track record, increasing the dividend year by year. And you know what happened in 2008 in the financial sector?
Yeah, it was really bad. And it took
really bad.
More than 10, 12 years, I guess, until they came back.
Yeah. The good thing is for Rowe Price investors or shareholders, unfortunately I wasn't at that time, but okay, different story.
You were too young.
Yeah. Too naive. With Rowe Price, they continued increasing their dividend during the financial crisis, so the default of the Lehman Bank, in 2008. And I mean, this is really a quality sign, I would say, in the financial sector, that they still continue to to
continued,
increase.
yeah.
To increase the dividend, yeah. So you see, it's quite late, yeah. But we give our best, yeah. And in general, if there are any questions, yeah, please ask us in the comments, yeah.
Exactly. If we use the wrong words or something, yeah, and you don't understand us, so just let's exchange in the comments.
Yeah. And yeah, again, you can see here a very healthy payout ratio based on the free cash flow, and also the PE ratio. I would say this is attractive. I mean,
I guess so.
13, yeah.
But in the financial sector, it's in general much lower, yeah. So
yeah, of course, yeah. But maybe you should also mention what actually does to your Rowe Price. I remember now.
Yeah.
Yeah.
You should mention.
I should.
What are they doing?
It's an asset manager. So it's the little BlackRock, but it's not. Definitely not. Yeah. So what is actually T. Rowe Price? What's the business model? Yeah. They are an asset manager. They manage 1.6 trillion assets under management. So they are in the top 20 worldwide from the asset managers. Most people, not most, but some of them, they say it's the little BlackRock. It's definitely not, because they have the focus on mutual funds. So not ETFs, the opposite of that, but to a very, I would say, free of charge, sometimes free of charge, but very low cost level. Yeah, so not like with Austrian banks. Yeah, different story. So I see them really as a complementary investment to BlackRock, and you can have both. But again, it's your decision, and we do our decisions, we do our due diligence. T. Rowe Price, yeah, are very, very solid, and it has no debt. That's important.
Yeah.
Yeah, nearly no debt. Yeah, I think 100 million US dollars, but come on, peanuts.
I would be happy with that if I would have.
On the liability side?
Not on the liability side, but on the positive side, would be helped with that. But anyway, different story as private person. Okay, let's continue to the last one. We go back to Europe and to our home base, Austria. Mayr-Melnhof Karton AG, world's largest, how do you say in English, paper, what is the word for Karton? I don't know. You know?
Me neither.
Ah, okay, super. It's also in German here. Should we Google translate it somewhere?
Ja.
Moment.
Ich weiß nicht.
Paper?
Das habe ich jetzt nicht
Karton?
gedacht.
Paper? I don't know.
Karton.
Cardboard.
Ja, Cardboard.
Yeah, it's just, nicht mehr Cardboard.
Yeah.
Okay, we searched the word cardboard producer, recycled cardboard producer. I hope you understand this word. If not, you have to translate it back again as well. But anyway, why did you choose this company?
Because it's an Austrian company. No.
Yeah,
but to be honest,
yeah,
we're talking about
like
currency diversification.
And also, maybe we should mention, I have it in my portfolio. You don't have it, as I know, from the German version.
Yes.
Yeah, but you
still not.
you consider maybe one day to have it. But okay, tell us more. Dividend yield 1.74. That's not so much for a dividend strategist like me. Well, but I'm happy to have bought it many years ago. So I also have these gains on the price gains that have been massive in the last years, especially. But it's your turn. Why this company?
I mean, we mentioned it before in this video. It depends when you start invested in Mayr-Melnhof, and there could be in the past, if you go back the chart, and look 2018, 19, there are a lot of let's say more attractive price niveaus, where you started or could have started your investment. Even I could have started, but I missed it. Nonetheless, from an Austrian point of view or capital market point of view, you see here 0 years of dividend increased. Mm-hmm. Nonetheless,
but still you picked it.
Yeah, I picked it. But and this is in comparison to other Austrian stocks. You see here at least 25 years the dividend not lowered. Okay. So at least constant, but also with increases, with slight increases. You see here dividend growth rate of 2.7%. I mean, it was above the inflation. Now it's below. But hopefully that's just a temporary phenomenon.
Yeah, but still you also have to on the price of the stock that just surged in last year. So on that, of course, it has to be lower.
I mean here 3 points, and I will keep myself short. I try at least. So first of all, we talk about diversification. Here we have at one side diversification in euro currency, so in our home currency. Interesting. You have here secondly also diversification in terms of size of the company. We're talking here about a mid cap, with 3.7 billion euros, So I mean, I'm always interested to have a very diversified portfolio also when it comes to company size, meaning mega caps, large caps, mid caps, small caps, So from this point of view,
and different sectors as well.
Interesting, different sector, with materials, and you also invest here in a company which you can assume somehow under the ESG megatrend, I mean recyclable cardboards, as we learned is the English word for this. But it's really about recycling, making use of the resources we already have and took out of the nature.
And I think it's a hot topic at the moment. I mean, more and more people buy online, and all this has to be somehow transported in this. How do we say it? In this, what was the English word?
Cardboard.
Cardboard, yeah. I never used this word. Write us in the comment, which would be native speakers. Please, what would be the right word for this packaging paper? I don't know. I never used this in English. I don't know, or maybe I just don't remember in this moment.
Cardboard boxes,
This paper boxes, they use it Amazon and everywhere. But anyway, it's a hot topic, I guess. And one more thing I would like to mention is some people just think on this, it has to be environmental friendly and ESG and so on. And for me, it's also important, for example, that it is from my home country. Of course, a lot of people might now comment and but you should never think about your home country and this is no good choice for the portfolio. But if it's for me something I also like, because I can visit the annual meeting, I can exchange with the management, I know what they're doing, where there's the headquarter, I know the other shareholders, or at least some of them, and can exchange with them. This is something I personally like, and which makes it for me more trustable to invest in such a company. And so I think everybody has his own strategies, and I think this is okay, and you might have completely different ones.
So you're talking about shareholders. I mean, 57% of the company stack, shareholder structure is owned by the founders of the company.
By the family,
by the family.
It's also interesting. Family-owned business is also interesting for the strategy.
I love to invest in family-owned businesses, and Meyer Menhoff could be in the future, maybe, and it is already on my watch list, but you see the share price level is, for me, at the moment, too high.
But still in the top 5 for you.
Yeah, of course, Also, again, this sample of 5 stocks is also built on diversification, So it's not only about the dividend yield as a singular factor, it's not about only the dividend growth rate, and there are also a lot of other different factors you should build in your investment case,
I thank you just a lot for your picks you made for us, and for this very exciting exchange. For me, it's always such a pleasure just to talk about the topic investment and stocks. So I always have to be careful not to talk too much on such a topic, because I just can't stop. But I think for this video we will stop right now, and we will take this as a keynote. So further exchange in the comments, very appreciated. Thank you so much for your time. And anything else you want to add to this video?
I mean, thank you again for having me. Thank you also for your time watching this video.
Thank you for watching. Thank you.
So if there are any questions, we are both happy to answer them in the comment section. You can follow me on Instagram. Bernhard will be so nice, and also link to my Instagram channel.
Sure.
And I mean, again, hopefully we gave you some impulses, and elaborate on the stocks further on. And if you would like, we can also do it, I would say, in the future again.
Yes, I would be a pleasure. I would appreciate it a lot. And I think what's for me about having such exchange and also record it, so it's not only because of the video we are meeting, it's also because of our personal exchange. And I would say we record this as well. So this is more what it's about. And for me, it's always a massive inspiration just to stick to investing, to stick on a topic, to learn more. And this is what it's for me about. And I think this is also what these videos are about. It's about inspiration and exchange with like-minded people. And this is also what I appreciate so much in our highly valued community. And I think this is getting an endless ending. But anyway, now we finish it. So thank you for watching, and goodbye.
Thank you. Bye.